Hello, good morning, and welcome as always to TradeGate Hub's morning market update. Of course, I am your host, Eliman Dambell, and thank you for taking the time to attend the TGH session this Tuesday, 1st of June, essentially, guys. Yesterday was a bank holiday, not only here in the UK, but also in the US, so we did move forward the session to today. Now, in relation to the rest of the week, there is a huge week ahead for markets. Of course, we have non-farm payrolls first Friday of the month later on this week. And of course, we have some data in between now and then. Of course, over the weekend, we did see some moves which we will be able to get through and look at as the session does progress. But there's quite a lot to digest, guys, quite a lot to potentially preview. But again, before we do start with the preview, before we do move forward with the agenda, just please do me the favor of, as always, go through that risk warning on the description. And of course, we will be able to commence there after. Now, one of the main pieces in which a lot of us have been looking at recently was, of course, gold. Of course, there on Friday, we had gold somewhat decline, hitting, I don't know, as low as 1890. Let's have a look. What was the intraday low there on? So it went as low as 1882. It went as low as 1882. And of course, if you remember, a lot of us had forecast, and to be honest, still for me, I'm still in the business and still in the game of expecting this to potentially continue a bit lower. Of course, this is what we always say, guys. We don't know the timing. We don't know the timing. The indications, the analysis could essentially point us to one direction. But until the time is right for that move to potentially happen, it's not going to happen. Today, for example, in the US, we have manufacturing data, ISM, I beg your pardon, market manufacturing numbers. We have GDP numbers coming out of Canada, out of Italy. We have core inflation numbers coming out of the Eurozone, employment numbers coming out of Germany, and so on and so forth. Interest rates decisions from Australia, and all of these, a lot of these have already happened. But guys, there is a lot. There is a lot to digest. And in relation to gold, for me, as you can see, of course, I'm still in this position there. Probably 1917 will be my break point, my stop loss if this market breaks from that level. Of course, you could see already the market's attempted to reach that high 1916 earlier on, but we haven't seen that break happen as of yet. Now, it'll be interesting. May was a dismal month. May was a dismal month for the most part. Weather was absolutely horrible in the UK. I'm not sure it was in the States or where you were until the last week of the month. The data in the US was absolutely atrocious. Non-farm payrolls came in 700K less than expected. Retail sales numbers somewhat flattened. Consumer confidence was static. So we did see quite a lot of data and news essentially waver. So we did see quite a lot of wavering of data and things of that nature. Of course, that did give way to a very miraculous May for gold, as far as gold prices reaching their highest since January. But again, it's a case of, will we see a turnaround? Will data improve? Will we see non-farm payrolls hit expectations? Will we see, of course, between today, tomorrow, we will be back tomorrow as well, and Friday, we will be able to look intraday and see how the markets are positioned. But for me, the analysis remains the same. We're still looking at the RSIs yet to pass that 78 level there. You can see 77. Again, intraday high so far 1916. Markets have since eased. It's a case of, is it able to fully go over that point? And if so, I think you may see a lot of people start to exit, because if this RSI does cross that 78 level, head to 79, I do believe, just by zooming out, you may have some of those bulls, which were last seen in July of last year, taking us to that ATH, that all-time high, may re-enter, trying to take us back to those levels of the RSI. Of course, we're nowhere near the ATH as far as price is concerned, but I believe as far as volume, we may be seeing similar volume to that we saw, ironically, guys, this time last year, June, July last year. So it's definitely one to look for. Definitely one to look for. So that's gold to start off the session. Moving forward again, I think it's we have to look at Bitcoin. I have to look at Bitcoin first session of the week, especially after a long weekend. And guys, again, those who would have bought the dip now are probably looking at themselves a bit like, where is the action? Questioning that decision. Questioning, why isn't this climbing immediately? Why aren't we seeing that reversal in which we somewhat envisage, that immediate reversal that we somewhat envisage? Of course, you can see since that initial drop now, again, like we said, guys, after the first bounce of resistance and the first failure to break resistance. This is a H4 time frame, by the way. But after that first breakout, that full attempted breakout, which did not happen, we automatically called consolidation. We said typically after such a decline, the markets have to draw breath. The markets have to consolidate. The markets need to go through that uncertainty and essentially appreciate what is next. What are they hoping to achieve, and so on and so forth. Is there, I don't know, more bears in? Are there more bears in the room? Rather, are there more bulls in the room? And which essentially will prevail, which will prevail, and we still don't know at the moment. We still don't know. It's still a wait and see. I'm sure, again, as the data starts to, not data, but as the days rather start to progress, what you may start to see is, because I think with this, it's a matter of timing. It's a matter of timing, but it's also a matter of what's happening socially. What we've seen recently, to be honest, what we've seen, it's been two catalysts. Firstly, of course, the Tesla move to integrate Bitcoin, or to start accepting, or to publicize its own investment. Then you saw quite a lot of people coming out, but Tesla was the main one. But even before Tesla, we saw some rallies. I believe that was more social. Everyone was buying Bitcoin. Then Tesla came in, and then more people started buying Bitcoin. But I believe now it's a case of people react. I'm not really sure what they're looking for. So I think people are just waiting to see what is next. What is going to essentially come on the side of the bulls or the bears to potentially lead prices higher or lower. From a technical perspective, currently at 44, you're looking closely to that 41 RSI, 40 RSI level. If it's able to break below, then you may be moving to the side of the bulls. But again, that 53 level. So I think it's either above 53 or below 40 for the bulls or bears to really poke their chest out and essentially show we are here and we are ready to take the next steps to the direction in which we favor. Okay, next up, S&P. Again, guys, we said last week there was no doubt. We damn near we're ready to somewhat, I don't know, cut our hands off if the S&P didn't reach an all-time high. We knew it was just a matter of timing. Again, and even in saying that, you see the reason why, because even a week ago, 2 weeks ago, knowing that this was heading back to an ATH, you do see the uncertainty there. So a lot of people could have bought, but due to margin, due to leverage and things of that nature, you may still have lost. Just being involved when the markets were essentially trending downwards. So these are the things we always like to say. Just even from a margin perspective, guys. For those of you who are trading, always understand the leverage, the margin requirements. How much do you need in order to maintain a position? Never put yourself in a position of risking too much. And again, sessions aren't here for advice, but I think these are very, very basic common sense things when it comes to trading that everyone should know. So always put yourself in a position of just understanding those, because what you don't want as well, but I've seen it happen time and time again, where a lot of traders would have held positions where the positions essentially go against them. I beg your pardon, the positions aren't even filled. So you have a pending order waiting in the wings to be executed, but the order is not filled simply because you did not have enough margin to execute that trade. So I think that's a situation in which you don't want to be in. But as I speak, SPX now is continuing to rise. Hopefully, this may be in anticipation of growth from the IHS survey later on. I'm showing that manufacturing is potentially on the rise there as well. But guys, again, I think we will this week with the data coming out, I would be surprised. I'm saying it's going to happen Tuesday, Wednesday, Thursday, Friday. I'm not saying it's going to happen in these next 4 days, but I will be surprised if we do not see an all-time high from this in the next few days. I'm telling you to go and remortgage your house to put a trade on SPX, but you can see we are pretty much a stone throw, somewhat of a stone's throw away from recapturing that high. Moving forward to the currency side of things, we probably have another 3 markets to look at before we leave. Apologies again for the later start today. A day late, essentially 10 minutes late. Some issues there from a technical perspective, just getting set up. But from cable, we see a lot of resistance. Remember, a few weeks ago, we looked at this and the potential for it to go even as high as 144. But there is a lot of resistance there. It hasn't been to that level for around 3 years. And we see why. The market's really, the cable rate really doesn't like to, especially in the last few years, it doesn't like to breach this point. But guys, again, what do we have happening this week? We have a lot of data coming out. A lot of data coming out in the UK, in the US. We've already named them even today alone. So it's a case of waiting and seeing, I believe, for cable, how this this data essentially is swayed, which way does it essentially point to, and the potential influence it will have on even central banks to go ahead and move and take some decision. So it's an interesting one. It's absolutely an interesting one to pay attention to, I would say. But at the moment, again, it really is looking a bit lower, but I would not be surprised. And again, this is where the analysis in you, the trader in you, comes in, to switch through those time frames, to use different indicators, pay attention to the news, because I believe when a move does come, it will come. So I think just put yourself in a position of anticipating and being well prepared for a move of the cable rate. Mainly based probably on what's happening fundamentally. We're seeing a lot of fundamentals impact this. Consumer confidence there on consumer sentiment there on Friday was one of the reasons why we saw that rise there. So just pay attention, see what's going on, and I think you will probably be fine. You will probably be fine as far as being in a potential position to succeed. Moving onwards, S&P, the UK 100, the FTSE 100 here, of course, based in London. Now with the FTSE, it's similar in a way because you see it is trending upwards towards that 64 RSI, currently at 63 moving averages. Yeah, we had that crossover there back in October, November of all of the moving averages, but we still have some. The difficulty here. This is a weekly time frame. I just wanted to show you the long term. In a weekly time frame, you're going back 8 years. You're going back 8 years, and we cannot see a breakout of this 64 RSI once. You see a few attempted, just there, 1, 2, 3 barely, but you can see what I mean. For the most part, it does not leave this point. But again, guys, what we've seen over the last year, a lot of things are happening which haven't happened before. So I do believe it will take something big for this to happen. But it does look like it's attempting to recapture those pre-pandemic highs, 7,700 and so on and so forth. Looking intraday, again, a lot of uncertainty. This probably looks very unappealing to the outside investor. But again, this is where the cable rate could come in, because we know the correlation as far as cable and at the S&P 500. So could that potentially be one of the catalysts for a move here? So again, it's the theme every there are certain times where a lot of markets are consolidating simultaneously, where there are a lot of unanswered questions, a lot of questions which are being asked and they're slowly being answered, but not fully. And of course, in trading, no question can ever fully be answered. There's always data out, there's always new information. So we're continuously getting a new swing of information. But I think what's happening now, pretty much just a year and a few months after the peak of the first pandemic, we have 4 or 5, 6 vaccines out at the moment. We have places reopening, but people, how would I phrase this? Not people, but markets are still somewhat waiting to see that complete swinging pendulum to say we're back. We're not going back to what we were in 2020. I think that has not happened yet. You're still having murmurs every now and then of people saying this variant and that variant and things of that nature. And you aren't seeing that definitive blow either way, the definitive blow, I don't know, to the bulls saying yes, I don't know, things are back to normal, things will not go, we will never see another lockdown for our lot. We haven't heard that. We aren't seeing this. So I think these are the things we're waiting to see. Maybe it comes down to the adaptability of the vaccine against new variants and things of that nature. And again, from a trader's perspective, guys, we don't know. And in a way, it is not our jobs to know the fundamentals. Let me say that again. It's not our job to try and forecast what the fundamentals are going to, because you or I can't control what the Federal Reserve is going to do. You or I can't control what NFP is going to be this coming Friday. You and I can't control what a certain politician thinks is the best approach for COVID. All you can control is looking at the charts, reading the charts, looking at what they tell you. Make sure that you are in a position of being well capitalized to place your trades, but also in a position of knowing what will happen or when a certain, I don't know, the forecastable information will be released. So for me, with this at the moment, 59, potentially heading to 64, which will probably take us just above, let's say, I don't know, 7,100 if it does happen, or probably just at, I don't know, 7,183. But then you see still uncertainty. So it's a wait and see. But even in this uncertainty, you may be able to find some small opportunities. And guys, crude oil. Today, what we have OPEC Plus, OPEC and its allies, including Russia, meeting to decide what's the situation as far as oil prices is concerned. And guys, lo and behold, and this is what I mean. So regardless or not if we knew, going back to what I was saying a second ago, regardless or not if we know what OPEC's going to decide, you have an idea. You look at the analysis, you see the potential for the moving averages. You see they didn't look like there was a crossover downwards. You see the momentum comes up. Yeah, historically, it usually tails off at 67. but maybe switching the time frames, you would have been able to see that you see what I mean? So just making those little adjustments as far as analysis will give you a picture of what could happen. And great move there with OPEC. Probably you're seeing demand increase. But I think there's a lot of demand, but you're probably seeing OPEC looking at increasing supply to match up with the demand, because we had recently the EIA, the Energy Information Administration, saying there's over demand. We have too much demand, and OPEC literally needs to get to work to match up to the demand, which is coming in. Of course, we're seeing OPEC potentially looking to do that today. Hence the rise of oil prices, and essentially this is the highest crude has been. Let's see, let's go back. If we look at a weekly, it's easier. This is the highest we've seen WTI crude even since before the pandemic. You're going 3 years. Crude oil today has hit its highest level in 3 years, guys. And crude oil, of course, was one of the most impacted markets last year. So just look at the run of crude oil in the last year. It went from trading at a historical low to essentially being given away for free, or you're being paid to take crude oil. And now you're seeing, I don't know, just over a year later, it's trading at its highest level in the past 3 years. So guys, there's a lot happening, a lot we haven't seen before, a lot we probably will not know, but we will get further guidance on. I think this is going to be a big week. First week of June, halfway point of the year. It's going to be a big week. It's going to be a big month. And again, as far as you being able to keep abreast of what is going on, have a look at TGH, Mike V later on, the coach Dell himself later on also. So there is quite a lot of data coming out from TGH, coming out from the platform. And of course, we will be able to work with you to keep you updated with all of the occurrences in the market. So guys, again, we're back from bank holiday session today. We will have a session tomorrow and a final one on Friday. So I will see you then. But any issues, any questions in which you might have, just please feel free to type away to me on TGH, and I will be able to assist you. All the best. You take care. Bye-bye.